Well, guys, we did it. A new all-time high daily and weekly candle close on the S&P 500. We have been calling it for weeks now, but I did not anticipate that we would see it quite this quickly. And incidentally, this is the fastest bear market recovery ever for the S&P 500 and the third fastest in history for the Nasdaq. And it was a close one, you guys, today, with Trump tweeting in the middle of the day that he was canceling trade deals with Canada. But just like every other dip over this recovery, it was quickly bought up. So despite what surveys and sentiment indicators may be saying, we need to stick with the flows in a market like this. And with big funds still underweight equities, I suspect the flows are going to continue for quite some time. I'm really keeping my eye on the latter half of this year for more dramatic action. So with all this, I need to admit that on Monday, I was not bullish enough. I was saying that markets would most likely consolidate through next week before moving up. But just like when I was telling everyone in the early 2010s that Epstein is a brilliant investment banker, I was wrong. Despite charts and indicators being vastly overheated, the fact that we pushed through to all-time highs before things cooled off is just validating the strength of this rally we're seeing. And that Gann seasonal date that we called out as a turning point for the crypto markets on the 23rd seems to be holding true. And now equities appear to be mirroring that timing and that risk-on sentiment. So let's wrap up the weekly macro, dive into the key charts to see how things are looking for equities and what we need to watch out for on that all-important crypto weekly candle close on Sunday evening. Let's go. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Welcome back to the Trading Apologist. My name is Tom, and I hope you all had a wonderful week. So I'm testing out a new editing software today to try to speed up this whole process. And while it hasn't made anything faster yet, it does have these TikTok-style touch-up filters. So let me know in the comments if you prefer a version of me that's easier on the eyes for future videos. Before we dive in, if you do find value in the content, please like, comment, or subscribe below. It really does help out the channel and helps us get out there to more people. So everybody is talking about the new all-time highs, but there is so much happening in the macro to discuss this week, particularly on the crypto front. First, just like the overheated charts we were talking about in the intro, pushing through major resistance to all-time highs being a sign of strength, so too is the way that markets have been ignoring, or mostly ignoring, macro events. Just since we were here last Friday, in the last week, we've had the US enter a war, we got a ceasefire, the ceasefire didn't really hold, and then we got a ceasefire for real. Remember that the muted reactions we've seen to all this is not normal and points to how strong the market and the risk appetite are. In contrast, if, say, this fall we get rate cuts and the markets drop, something like that would tell you that the opposite is true and it's time to watch out. On the crypto front, and this is really where the action is, Trump ordered Fannie and Freddie to count crypto holdings towards mortgages, and there was a lot of false reporting on this. This isn't a Bitcoin-backed mortgage, it's just counting your crypto holdings, assuming they're in a US registered exchange, towards your net worth when you're qualifying for that mortgage. So forget about any crypto assets you may have in something like an offshore account with Binance or BitUnext. Even assets in your cold storage would need to be moved over to a qualifying entity to count towards this. So let's see how it plays out. Also, we had Trump saying this about Bitcoin.
It's become amazing. I mean, it's the jobs that it produces. And I notice more and more you pay in Bitcoin. I mean, people are saying it takes a lot of pressure off the dollar. And it's a great thing for our country.
Which is shocking considering the environment we have come from under the previous administration. Also, Texas signed its Bitcoin Treasury into law, and we are one step closer to tokenized assets with SpaceX exposure coming to Solana. On that last note, don't be too excited quite yet. Tokenized stocks are going to come, but they still need a shift in regulation to not be as contrived as this value match of SpaceX shares. I looked into the details, and it's almost as complicated in structure as an SPV, and I was looking into one of those for SpaceX exposure via a fund a few months ago, and the way it's structured, you don't hold the underlying shares, you can't control it, it's not very liquid, you get eaten up by fees when you sell, and you're paying a premium. Anyway, SPVs are very complicated and very risky. This is almost as complicated, you just don't have as high of fees. So tread carefully, but I think we will get there in a meaningful way with tokenized assets soon. Anyway, let's get into the charts and see how the week closed for equities, and we'll recap the key levels for crypto to hit on that weekly candle close on Sunday. Starting on the S&P 500, and you can see we had that all-time high daily candle close, cleanly above this range, sitting right on top of it. It was a close call, as we said. And if we just go in really quickly into the 15-minute chart, you can see this is where Trump announced that the trade deals with Canada were off, and we had a fairly strong drop. And then right into the last hour of the day, we had a rally with the last few minutes of trading really pushing up strongly to get us to close at 6,173. Now, blue sky breakouts can have some legs behind them, and we need to discuss the most likely path, because after those Israel-Iran tensions and breaking below this trend line, we were talking about perhaps a bit more consolidation until that July 3rd date, and then breaking away. But now that we have taken this path, which, again, granted on Monday I thought was off the table, when we were on this side of the trend line, I thought it was possible and the strongest sign for markets to move up and consolidate above this range. So now it appears we are on that trajectory, and we need to see how high we can go and where we consolidate. I do anticipate with a move like this that we will at some point, maybe later in the summer, August or into September, see a dip back down into this range and then bounce away to higher prices. But the market should build a little bit more structure than just this V-shaped recovery. But for the near term, anticipate more strength, and we would like to see markets hold that breakout of that 6,150, let's just say, for round numbers. If we go over to the Nasdaq has been stronger. It already broke out a couple of days ago, and we are cleanly in that all-time high range for the Nasdaq as well. What is interesting, while this has been stronger, we did put in a weaker candle for the Nasdaq right here on this recovery day. And then we also had a weaker candle percentage-wise today. So it's interesting to see the S&P 500 gain strength, but the one thing that has not gained strength in the same measure is the Russell 2000. It is still well off of all-time highs. Actually, we are, let's see, we are about just under 13% away from all-time highs on the Russell, and we are right around that 200-day moving average. We just broke through. We had tested it once before. So this is just a sign to you that this is not a broad-based market rally. It's in select sectors, and tech and semiconductors, risk assets from large cap companies are really leading the way. So it's important to be in the right assets because not everything is moving in unison. If we go over to the dollar briefly, the dollar continued to break down with its lowest daily and weekly candle close in this breakdown for the dollar. Now, with so many people short the dollar, I mentioned on Monday that there is a chance that we could get a bit of a rally up, but this is just a sign of how truly weak the dollar is. And this is good for risk assets. As the dollar comes down in value, then our risk assets tend to go up in value. Not necessarily on a one-to-one correlation. You're not going to see this the same day, but over the long run, this is going to help risk assets. So below, we're looking at that 96.4 or that 94.6 on the low end. If we go over to oil briefly, it has not been able to catch a bid after that breakdown. It has been bouncing around the lows here where we talked about major support coming in at $65 a barrel. And for the last couple of years, this whole zone I have marked in red has played major support for oil. This one, while it is good support, you could try to go long on it. It's a bit too risky for me because I just don't feel like you have an edge when it's so beholden to everything that's going on geopolitically in the world. So oil, while it is a bit risky, if you did want to try a trade on this, you have a clear invalidation right here below 65, and you know a breakdown from here would lead to more downside. So you could set your stop really tight and try to play this for a bounce. And I anticipate around $70 a barrel is where you would see first resistance coming in, and that's our most traded zone, and resistance here on the moving averages from the cloud. Okay, SMH, we have to talk about it because this is really what pushed the Nasdaq to all-time highs earlier this week, because the semiconductors brought the rest of the Nasdaq along for the ride. And as we talked about on Monday, with this resistance zone breaking being the catalyst for more upside price action, well, we saw exactly that as we broke out of this consolidation. And just as a recap, when you have consolidation zones and they break out, that's when you can anticipate these more explosive moves. And I would not be surprised for the semiconductor space to test new all-time highs in the coming days, and certain names have already broken out. The biggest of those names that has already broken out to new all-time highs is NVIDIA. And if you do a fib extension on this, move is targeting around $175 for the next point of resistance. So you can mark that up on your charts. And if we have a little retest of this breakout zone and you want to play that, you absolutely can, and you have a clear invalidation. These are the kinds of setups I like. I mean, obviously, I like catching the lows much more, but if you're not in something and you want to play a breakout and you have a clear target, in this case, that 175, you could do that, and then you have a clear invalidation for your stop. But NVIDIA is definitely leading the way, as well as TSM. And you can see that TSM has broken out into new all-time highs as well. Not quite as strong as NVIDIA yet, but these are leading the semiconductor space. So if you're looking at the index of all semiconductor stocks more broadly, obviously they're not at all-time highs yet. And when you're playing a sector, you want to pick the names with strength behind them. And that is clearly NVIDIA and TSM. Okay, moving on to Bitcoin, and we're starting on the weekly. And this weekly candle close last week was that ugly one we discussed on Monday. And here is where I was concerned, where we broke down from that 62 level on the RSI. And historically, every time that has happened in the last 3 bull runs, actually all of Bitcoin's history, but I just analyzed the last 9 times in the last 3 bull runs, we have seen corrections of at least 10%. Now, this was an extreme event driven by tensions in the Middle East, and we have now had almost an engulfing candle here. And if this RSI can close back above 62 this week, which it is flirting with right now, we need to see where that's going to land at midnight UTC on Sunday for the official close. But I would be willing to consider this perhaps a bit of deviation and take that prediction off of my mind. But right now, I need to see that weekly candle close first. If we zoom into the weekly candles, the other thing we want to see, and we would need this for the RSI to close above 62, we want to see the weekly candle close above these prior high weekly candle closes at 104,500. And then we also want to see it close above the 50% of this range, which we are above right now, which is at 106,200. So let's go into the daily for just a bit more detail. Okay, if we move into the daily, we have been consolidating above the 50% of this previous consolidation range. I'm just keeping this drawn without this wick because this is the level that we've really been watching. If we want to extend that down, we can see where that 50% would land otherwise, but I'm keeping it there for now because that's been the majority of our trading range, and we just wicked below briefly. And we are now holding above this trend line. We retested the 50% for support on this bounce, and we're slowly grinding away. Now we're into the weekend where volume normally dies off, but we are in a bit of an upward trajectory for this consolidation that's respecting this trend line, and it's also respecting the middle cloud here on the daily, if you can see that white line there. So these kinds of consolidations that grind slightly upward are generally quite bullish and can lead to continuations. So we just need to watch that and see if and when it can break out. And if we get a breakout, say Sunday night before the close, and we have a very strong weekly candle, I would totally forget about this breakdown, and I would just be eyeing new all-time highs. The other thing we have as a tailwind is that James Wynn is shorting Bitcoin right now, and he seems to be the Kramer of cryptocurrency predictions at the moment. So let's keep our fingers crossed that that holds to be true as well. No, you know what? I shouldn't make fun of him. He's been through a rough patch, and I hope he gets his house in order and learns a little better TA. Okay, moving on to Solana on my very busy 4-hour chart. And we had that breakdown from the 50% earlier this week as Bitcoin broke down. The bounce and recovery has not been quite as strong on Solana, and I really want to see us close that weekly candle at least above this 50% at the 141.30 level for round numbers. We are currently, while we wicked through it earlier today, bouncing on that for potential support. And I would like to see a strong move away for Solana. We are above this downtrending line right now. So I have entered a little bit of a long on a perp because we're at that 50% level. We retested this line for support, And I'm seeing if that can play out. And like with all my trades, you're probably sick of me saying this, but we have a clear invalidation level. So I know where I can set my stop loss, and I know where I'm going to be wrong if this doesn't play out. Now, if this doesn't play out, be careful. I love Solana as an asset. I love the technology. I absolutely believe in this. But if we're just talking about macro swings, I'm not even going to go back to the $300 all-time high. But as we're coming down and we're making a low, and then we're making a lower high, and now hopefully we're making a higher low and we bounce away, that would be a sign of strength in the charts. However, if we break down from here and then we have our lower high and then we make a lower low, that would be an extreme sign of weakness, and something would be wrong in the background that investors are not supporting this. I'm not saying that's going to be the case, but watch out. If we start to break below, say, $120, I am on red alert for Solana. Again, I hope it doesn't come to that, but we need to watch both sides of the market. And this chart, despite how great the chain is, has been showing extreme weakness, and I hope it rebounds soon. Okay, moving on to MicroStrategy, and there was some odd price action today. So we've been in a bit of a consolidation range, and the highs of our range here are at 397, and we just wicked above those and then had a very harsh rejection away towards the end of the day. Bitcoin wasn't moving, and MicroStrategy started moving fairly substantially at the open of the day. So that always gets my attention perking up, like, okay, on in the background, who knows something? Who's buying up MicroStrategy right now? Because I would expect this would run if Bitcoin broke out. And the fact that we couldn't close very high, as well as the 4-hour chart being to the top of the range and being a bit overheated, just has me thinking that MicroStrategy may consolidate a little bit more next week, and I'm hoping we see that eventual breakout in the coming weeks. The bands here on the 4-hour are starting to tighten, and just like Bollinger Bands, these clouds from the confluence model, as they squeeze, it's telling us that volatility is incoming. Unfortunately, they don't tell us which direction that volatility is going to go, but we know to look out for it. Tesla, in contrast, we've had this consolidation range that I would love to get back in, but we rejected from that earlier this week. And today we had a bit of a rejection with a bounce back up. The key levels I'm watching right now, because we found support around this 320 range, which is a key zone of support. We also have the 200-day moving average coming up, which is sitting around that 312 right now. We know 310 is also another level of support where we bounce from right below. But if we break below this, I would watch out for potentially as low as the 290s for first support, maybe even 280. But I'm hoping that's not the case with all the tailwinds Tesla has right now. What we need to do is, obviously, we need to get back in this range above 330, and we need to see a daily candle close above 350. That would be a sign of strength that we can potentially break out through the top of this. And with Tesla, we have a low volume cluster above 364, so past these highs from the recovery. And once we get into that, price action can normally move through these low volume zones rather quickly. So it's called a bit of an air gap. So from that 363 to 367, if we break through there, then our next stop is close to $420. So watch out for that on the upside for Tesla. If we go over to the pair chart, you can see we had a very violent U-turn this week in the favor of MicroStrategy. And as I was saying on Monday with this extreme dip where I was talking to MopBots about potentially swapping earlier, because if you're waiting for this trend flip, you're losing a lot of that value, and these moves are happening really quickly and they're hard to catch. Sometimes that can be worthwhile considering when you get these extreme vertical moves in one direction or another, because whenever we see extreme vertical price action, you know that it's usually not sustainable and is most likely going to lead to some kind of correction in the other direction. Violent action one way normally leads to violent action the other way, whereas trends that are more gradual and stair-stepping up or down are more sustainable. All right, I want to talk about miners briefly because I sold some of my miner positions that I had been loading up on the lows on Monday because of that weekly RSI breakdown on Bitcoin. And this was just my way of de-risking a little bit because of the volatility that can come into these names. Not all miners are created equally, and not all charts are as strong for miners. So I only held on to one, and that was Iron, because the chart was looking strong, and I'm glad I did. We'll look at it in a second. But I just want to go through 4 key names on miners here so we can determine where strength and weakness is. And CleanSpark, it has retested the 200-day moving average 3 times now, and we had multiple daily candle closes above this now, and we are closing on top of this previous resistance zone at $10.55. So CleanSpark is one to keep your eye on. If Bitcoin starts to move again, I think some momentum could come back to CleanSpark despite how beat up it's been. And the narrative we've seen is obviously not with miners right now. It's with the Bitcoin Treasury plays, but money rotates around. And in the background, you've seen flows coming back into miners quietly. We haven't seen all of that carry through to the price action, but if you look in the background, you do notice flows coming back into miners. So CleanSpark's one to keep your eyes on. Iron has obviously had a wonderful run this week. Now, it is definitely getting overextended, and I'm wondering if I should start taking some profits as we're getting into all-time highs right here. So something to watch out for with Iron. Sorry about all the purple dots. All the InvestAnswers indicators updated this week, and I have not updated to the latest version on all my charts, but I will go through and do that before Monday. Reminder, always update your indicators. Okay, let's move on. BitDeer was one that I sold, and we were right into the 200-day moving average, and I was like, should I sell it? Are we going to get a bounce here? And I got a little bit lucky because we had a breakdown on BitDeer. I haven't had time to see what's happening in the background with the fundamentals of the company that may be causing this breakdown, but we are into the most traded zone now, so I would anticipate some support coming in, but breaking down from the 200 average isn't the best sign of strength, but I wouldn't consider it over for BitDeer either. As we saw with the bands on some other charts, they're starting to squeeze a little bit, so I imagine some volatility is going to be coming into this one. And then moving on to Mara, and this one is still a fantastic value, and I was honestly surprised to see it reject from the 200-day moving average again, but this was one that I sold as well because I picked it up at the lows, and the returns were decent from that $10 range to say the $15 range where I sold earlier this week. And part of the reason I sold was it was rejecting from the 200-day moving average again. So this one, if it gets to a good value, I would consider reloading. But we have that 200-day moving average, and we have the most traded zone here at around that $15.8 to $16. And beyond that, the volume does drop off. So if we can get through this zone and break out above the 200-day moving average, this could be a wonderful breakout play to look at as well, with a decent amount of room to run to that past peak at around $30. And where are all-time highs on this? Sitting at $34. So let's see what these can do. But a lot of the miners seem to be coiling and potentially getting ready for another move. Okay, moving on to Hood, and this one hit our price target this week of that $83 to $85. And like I said I would do, I stuck to my plan. I did not sell as many shares as I thought. I started selling some shares and I thought, why am I selling these shares? I'm just going to sell covered calls because Hood is definitely one I believe in long term. And if we do see a pullback, I could see it going to that $67 range and then bouncing away from there. But right now, I just wanted to de-risk my position a little bit because we are into that price target. And I imagine we need to see some consolidation on this before it can gather strength to move up to the next level. If we just bring up the profit-taking model briefly, we had our level 7 here that we're at right now, and level 8 is at $114. So that's the next one to look out for. But again, I would anticipate, because of how overheated these charts are on the daily and especially on the 4-hour, that we might cool off for just a little bit, even though they have their big crypto event coming up on the 30th. So keep your eye on this one. I still believe in Hood long term, but a little bit of a cool off would make sense. Okay, moving on to coin, and congratulations if you took this trade. On Monday, we were saying that the price target was at that $370. With how extreme this move has been, we overshot it. We got all the way up to $382 today before a bit of a rejection back to the outside of the cloud here at $346 about, and then bounced away from there to close the day. So coin has definitely been on the tear. The charts are a little bit overheated. Maybe we get another attempt higher, but this one also, like Hood, feels like it needs to cool off a little bit. And our eventual price target that we were talking about was that 444. Let's just say 450 for round numbers for that eventual price target, because ideally with those price targets, when you're doing price and time extensions from previous moves, it's nice to see them exceed the previous move in terms of time and price. Looking at Circle, and I'm glad I took a little bit off on Monday to at least cover my initial entry, because this one has had a violent rejection as we were anticipating. Normally with things like this that shoot up quickly, they come back down to earth at a similar clip. You can see we have that doji candle marking that reversal there. And initially we got a little bit of a support here at the 618. I'm drawing the bottom of the fib retracement at the IPO price. You don't see that candle here. And now our next level to look out for support is that 50% at that $166. That could be a good area because you have these previous wicks right here to look for support for a bounce. And what I'm looking for to exit a bit more of my position is if we get a bounce, what's that next high going to be? It's most likely going to be a lower high and then move away from there. And that would be my exit. But this does have a lot of hype behind it. It can stay elevated for a while, but this IPO craze is definitely the dangerous phase of this stock's lifespan. And this can run for a while, but with a lot of these IPOs, we see a violent crash like 12, 18 months down the road. And that is the time to pick them up as a great value for a longer term play. So look out for that in the future to try to get a great entry on a stock like this in a year and a half, maybe 2 years time. We'll just need to see how it plays out with other market corrections. Looking briefly at HIMS, because everybody has been talking about this drop after the cancellation of their partnership with Novo Nordisk, and that only impacted 15% of their business, but we obviously saw a much bigger drop than that on the stock, dropping as much as 36%. So when things are out of whack like that, there's obviously value in the stock, and it hit my first entry zone here at $41. I got into it. I'm sure a lot of you did this week, and we saw a great bounce. And I also have this zone marked down here at $34 just to keep my eye on if we see more of a correction. I know it doesn't make sense, but sometimes with things like this, you can see a bounce and then you can see one more correction. Maybe it doesn't get all the way there before it eventually recovers. That's not always the path, but it's something I'm keeping my mind open to. But we also have this massive gap fill here at 61. We could overshoot and we could close that too. So we just need to see how this plays out. And I have a friend that I trade with who bought some short-term call options that expired today on Friday. And he made an absolute killing with these, buying them for something like $1.30, and they got up to like $5 in value today. Just absolutely insane returns for a week. So if you know how to play with options, it's very high risk, but those short-term call options can sometimes pay off. I think obviously with options, giving yourself more time is always the safer play. Just wrapping up on some Bitcoin Treasury plays because they have been volatile. They are like the ICOs of this season, or we haven't had an alt season. Maybe the Treasury plays are our alt season for this year. But right now, let's look at DFDV. And this chart has definitely been weak. It has not been able to break those highs at that $53, but these moves have been substantial. From this 1350 low to the highs we had last week is 147%. So there's a lot of room in there. And right now it seems like we are bottoming on the 1 hour, on the 4 hour, we are close to bottoming as well. We just got a mean reversion dot. So we are into what I would consider a value zone or close to value zone. But this support right here at the 1425 at this previous consolidation range and these previous tops, which also corresponds to this previous bottom, would be a higher confidence entry for me. And I'm wondering if we get one sweep of those levels next week. I have this downtrending resistance drawn here on the price action and on the 1 hour RSI, and I'm looking for a breakout for that. And if you want to be more conservative, you can look for a breakout and a backtest of that for support to confirm an entry. But remember, set a tight stop with these. Use appropriate position sizing because they can be volatile and very high risk. If we go over to KNW, this chart has definitely been weak and is bleeding out a bit, but it is getting into one zone of support, which I would consider the value zone on this chart. And we have closed our last few candles right there on that level around $1.60. We originally opened trading on this at around 50 cents before it moved up to almost $5.30. So there is no clear support level from the fib retracement tool, but we do have this little consolidation area. So I'm again watching this as a value zone, and I entered a little position today with obviously my stop loss set just below at that 150 to see if it can maybe catch a bid from here. Moving over to ASST, and this is also into its last bit of support here on this swing low. We're at around that $3.90 level right now. And below that, our next volume cluster starts at $3.50. And then the major support really kicks in around $2.55. So right now, I'm just watching ASST and seeing if it hits one of these value levels. I have my alert set and I may consider getting back in. But the momentum and hype has definitely come out of these treasury plays, as you can see by the weakness in all these charts, and all of them sitting on their last zone of support before further breakdowns. The only good thing I could say about them right now is that we have clear invalidation. So if you entered this, you would know a break of these lows probably means more downside to at least that $3.40 range. CEP, similar to the other charts, has been continuing to break down, and this one actually wicked below these previous bottoms. So I'm looking out below to $24 or next support below that at 17. Really a lot of weakness in this sector right now, and we need some kind of news event or Bitcoin to go to new all-time highs to really bring some momentum back in. It seems like it's slowly bleeding out right now. Maybe that's too gruesome an analogy, but there's just not the same life in the charts that there was a couple of weeks ago. Okay, last one I'm watching, which is NAKA, Nakamoto, or formerly KDLY. And this one is in a bit of a wedge pattern, which is an indecisive pattern. Often the way you enter these patterns, you break down, but we have a clear support underneath and resistance up top. So I've set an alert for each of these. I haven't taken any action on this one. I'm pretty much out of it outside of just one share just to keep it popped up in my brokerage so I can monitor it there. But we did get a bounce away from support today, so I'm watching this one going into next week. All right, so that's it for the charts. Things are really looking good in the equity space, and I suspect we will have a little bit more room to run, particularly with that July seasonality normally being positive. On the crypto front, we do see those cracks in the charts, but the moves this week were strong. So just keep your eye on that weekly candle close, and I think there is a chance that we could see new all-time highs in the crypto space sooner than later. I hope you guys have a lovely weekend. I look forward to seeing you guys on Monday. Bye for now.